Hi everybody, Lawyer Autumn Whit-Boyd here. I am back with this week's Facebook Live show. Today we are, as we have for the last few weeks, talking about COVID-19 and the financial relief options that are available to you under the new laws. So I gathered, if you haven't watched last week's Facebook Live, it's on our website or the Facebook page. It is a long one, but I went over in detail our entire step-by-step guide to all the different options. Maybe not every single one, but most of the options for small business owners under the CARES Act and the Families First Coronavirus Act. Go watch that if you haven't already, because I'm not going to dive into kind of step-by-step in this one. I'm just answering some questions that have come in over the last couple days. And I will also note that just last night, because that's how they like to do it, we got new guidance from the Treasury Department, the Small Business Administration, on kind of interpreting some of the ways that the Paycheck Protection Plan, the PPP, is going to work. So we have updated those on our website at awbfirm.com/COVID-19, which is right below me on the screen. That is updated. It should be there if it's not already by the end of today. We just got those, as I said, late last night. And I'm going to go over a couple things that came out in those. A lot of it was guidance for the banks, so not really relevant to small business owners, but there were a couple things I want to go over. So, okay, I asked for on my Facebook page if anybody had kind of lessons learned after applying through PPP. So since I went live last week, the applications went live on Friday. So lots of people have applied. My brother-in-law actually texted me that he has received notice he has been approved. So that's great news. I submitted my own application on Sunday, and I got notice today that they did not like some of my calculations, but they've changed the guidance anyway. So I was wanting to submit new calculations anyway. So I'll now have a chance to do that. I plan on doing that later today. But here's some of the feedback that I got from people who have already gone through the application process. So Lacey Boggs, my friend, said, I applied for the PPP yesterday. The bank suggested attaching a W-3 as supporting documentation, which I had never heard of. And Gusto doesn't file on my behalf. I just attached my W-2s and hoped for the best. So I'm actually going to be recording probably later today an overview of the different kinds of documents that may be requested, so that if you've never heard of a Form K-1 or like this one, the Form W-3, I will be going over that. So keep your eye out for that. Just kind of giving an overview of these things you may never heard of, how you can figure out what you actually need to submit. What does it look like if you need to look for it in your records? So thank you to Lacey for that. I'll go over that again in that other video, and I'll be sure to post it here. The next question I got, sorry, I'm flipping back and forth through many windows. I lost my notes page. There it is. Okay, so the next comment that I got was from Becky Mullenkamp, who says she ran a quick report in QuickBooks to show her owners draw payments for 2019. So she's a self-employed person with no workers. So no workers other than herself. She did not have payroll records to submit. So she ran a report of her owners' draw payments for 2019. She said she was approved, so that's great. Every bank is accepting different documents, so we'll just kind of see. I ran a profit and loss statement from my QuickBooks, and they said it didn't match my worksheet, but I'm not great at math, so that very much could have been my own user error. So I'm glad Becky's bank accepted that. That's great to hear. Every bank, I will say, every bank is requiring different documentation, so your mileage may vary on that. I had another question. So my friend Michelle Ralston Shorter, she and I went to college together in Indiana. She and her husband own a chain of pizza stores in Colorado. So she wrote back, and I'm sorry, Michelle, I don't have an answer for you on this yet, but it's a good one. She has a question about the EIDL. Now remember, there's two different loans available. And if y'all are here, say hi or drop an emoji. Hi, Linda. Hi, Shelly. Great to see you both here. Michelle's question was about the EIDL. That's the loan that you apply for through the SBA, not through your bank. So that is the loan that has to be repaid, except you may be able to get an advance up to $10,000 that doesn't have to be repaid. But that is not the Paycheck Protection loan. But she said they're looking into this other loan through the SBA. And with their pizza chain, they had signed leases and started construction on 2 new shop locations. It is her understanding that the EIDL cannot be used to expand your business, but we had been using the profits. Hi, Kay. She'd been using the profits for the build out of the new shops. So can they use these loans, which are at a very attractive interest rate? They're, I think, 3.75 for businesses, 2.75% for nonprofits, with up to a 30-year payback. So that's really, really favorable lending terms. Can they use the funds from that loan to continue their build outs on the shops in progress? And what I do know, Michelle, is that under the EIDL, you are allowed to use the funds from that loan to pay basically your normal operational costs. So I would want to talk to an SBA rep, and I've got a call in to my rep, but I haven't been able to connect with her yet. You are allowed to use those funds for accounts payable. So if you were already, if you already had a contract with a general contractor, you were already building out these shops, I would think that you'd be allowed to use those loans to kind of continue that work, but I can't say for sure. So again, I thought that was a great question, and it's one that I'm going to check with my SBA contact on. I think the goal is they're not wanting you to start anything new, but if you already had those in progress, I would hope that you could still use those. All right, Kathleen Shannon, who you may know from Being Boss podcast and Braid Creative. She owns a creative marketing and advertising agency with her sister and another partner. She had 3 questions. So terms for forgivability, can you just do a top line run through? So for forgivability, that is only going to be under the Paycheck Protection Program, the PPP. And here are the 4 things you can use the money on if you want it to be forgiven. So payroll, that includes owner's comp, rent. So if you have a lease, which I'm fairly sure Kathleen does, on some office space, so you can use it for your rent. I will say if you own your building, so for example, I own this office condo that I'm sitting in, you cannot use it for principal payments on a loan, but you can use it for interest. So payroll, rent, interest, and utilities. So again, Kathleen, on that office space, you can use it for utilities. I have had a question come up. If you have a home office that you claim on your taxes under the home office exemption, can you use that portion of utilities that you claim? I would think so. You're going to want to document that very carefully. We haven't received, explicit guidance that's quite that granular. But what I've heard recommended, and I think it's a good recommendation, it's what I did, is to open a separate bank account where you receive the funds if you do get the PPP loan, and make payments from that account for these 4 things: for your payroll, for your rent, for your utilities, and for any interest. So that just for bookkeeping, because at the end you're going to have to provide documentation so that it's very clean. And you can show that very easily. You can always just run it through your regular operating account and match up receipts, but I think it's going to be cleaner if you keep it in a separate account. So those are the only 4 things that can be forgiven. Now, you can use those funds for additional things, but it's not going to be forgivable. So check out our guide. I'm trying to scroll through it to see if I can get to that part. Sorry. It can be used on, what can I use it for? Oh, I'm having trouble finding it. I'll loop back to this in just a second. Oh, here we go. So you can use the PPP money also for your accounts payable. It just won't be forgiven. So does that make sense? It's a loan, and it's got a quicker payback term, only 2 years. It's a lower interest rate though. It's just 1%. So it's a quick payback, but a low interest rate if you need to use it for your accounts payable. You can also use that. You can use the PPP money for a mortgage and healthcare benefits, but that is not going to be forgivable. So I wish it were simpler, but that's a great question. Okay, Kathleen had two other quick questions. Duration terms. Do you have to show that you use the loan during a specific time? So the way the law is written is you're supposed to use it for this period that ends in June. But I kind of have a question because this money is not coming out very quickly. If they're actually going to hold you to that. So you're supposed to use it between, let's see. Apologies, I'm scrolling through a long list of things. I think it's supposed to use between April and June. It's an 8-week period that you can use it for, but I'm wondering if that is going to be softened. So kind of stay tuned on that, because if you don't even get the money till May, I mean, who knows when these loans are going to be funded. I have not heard that any of them have actually been funded yet. That may get pushed back. And then third, taxes on the loan. So it is not supposed to be taxed. That's a great question. check with your CPA. As always, I'm not a tax expert, but my understanding is that the forgivable portion, normally if a loan is forgiven, you owe taxes on that amount because it's kind of like income. My understanding is it is not going to be taxed, which is great. But again, check with your CPA, double check on that. Okay, and I'm gonna hop over to the comments because we've got a couple of good questions that have coming in. So Linda says, what do I qualify for as a self-employed digital entrepreneur? What documentation do I need to gather? Great question, Linda. So you could apply for either loan. And if you go to our guide, there's also some other free money that you may be eligible for. You maybe can apply for unemployment. I know Linda does travel. She does trips and retreats. And my guess is that Linda's business has totally shut down because we're not traveling right now. So you may be able to file for unemployment, which you would do in the state where you live, or I know you're kind of a nomad too, so wherever you are, or wherever your business is located, that's kind of another open question. But you should be able to apply for unemployment benefits, which may be a fairly significant amount. The average that I've been seeing is that it's about $1,000 a week, so $4,000 a month. So go ahead, you may want to consider applying for that. You'll get the stimulus check depending on where your income hits. And also you're eligible for either of these loans as a self-employed digital entrepreneur. So as far as documentation you need to gather, that's going to be different for each of these loans. The SBA is originally was asking for a lot more documentation. They've kind of streamlined their document requirements. That's for the economic injury disaster loan. That's the one you have to pay back. But I would say at a minimum, go ahead and gather your last year's tax returns, whether that was 2018 or you filed for this year already, your profit and loss statement for 2019, any payroll records if you did have anyone on payroll. They may also ask for a balance sheet, which is just a different financial report that you can run in your bookkeeping software, or ask your CPA to help you with. Some other things that I was asked for when I applied for the PPP, they wanted a copy of my driver's license. I guess they're verifying identities. They asked for a copy of like the documents where I incorporated my LLC or formed my LLC. So that was from the state. I just pulled that from my records, my, what's it called? Articles of organization, I think they're called. I had to certify whether I owned any interest in another business. So this will come up for Kathleen too, if you're watching on replay. We have a separate LLC that holds our office. So I had to answer yes and just fill out another form about that I own more than one business. I think that was it. Tax returns, profit and loss, maybe a balance sheet, your organizational documents, your driver's license. The W-3 that was mentioned may come up. They may ask for a Form 940 or 941. That's where you show what taxes you've paid, like those are payroll tax documents. You will also, if you have employees, have to show what state employment taxes you were paying as part of payroll. So those are kind of the main documents that I'm seeing come up. Let's see. Oh, good. Michelle was on the call. Hey, Michelle. Julie, good to see you too. Oh, Teresa makes a great point. So Teresa said the 4 things that you can use the PPP money on for forgiveness, because they're expecting the money to run out, and it looks like it may already be running out and they may be asking for more. They're wanting for the ratio between payroll and the other 3 things to be 75-25. So they only want you to spend 25% of that forgivable amount on rent, utilities, and interest. They want at least 75%, it could be more, to be for payroll. They're really wanting this to go to workers, not just to support if you have an exorbitant lease or if you have really high interest payments that you owe. They're wanting most of the money to go into workers' pockets. So that's why they are wanting you to spend a minimum of 75% of the forgivable portion on payroll. So thank you for mentioning that, Teresa. That is in our giant guide. How do you certify if you don't own another business? So when you go fill out the application, it will just ask you a yes or no. And so you only have to certify if you do. You only have to it was just an addendum. I wrote it up in Word, just saying that I own, I'm a 50% owner of another business. So she says you have to have payroll or an owner's draw to qualify for PPP. Cannot just apply with the 4 things. I'm not sure what you mean by that, Teresa. If you're still here, feel free to clarify. I'm wondering if she means that you cannot be operating at a loss, which is, I did have a client who is in the startup world and they have not yet hit revenue. So they're still just spending money. They're not earning any money and they're not paying themselves yet. So that is definitely, I didn't see any way for them to apply for one of these loans, the PPP, because they cannot show either a positive profit on the business, or which is how I think they're going to calculate the owner's comp portion. They couldn't show that, and they couldn't show, they don't have any employees on payroll. So Teresa, if you're still here and you want to clarify that, I'm happy to answer that more, but I think, and my guess is that's what she meant. Okay, I'm trying to keep these a little shorter than my really, really long one last week. So I'm going to sign off if nobody has additional questions. I'm obviously on all the social media, kind of giving feedback and answering questions as, the last thing I was going to do, I was going to go through the new guidance. So y'all keep hitting me with questions. I'm happy to answer them. So as I said, it was a kind of an FAQ, frequently asked questions document that just came out last night from the Department of Treasury and the SBA. As I said, a lot of it is really more relevant to banks, but I went through and highlighted a couple of things I thought were interesting. So one question that I thought was helpful is that the CARES Act excludes from the definition of payroll costs any employee compensation over an annual salary of $100,000. So if you're a high earner, or if you have an employee who's a high earner, you can still include their salary in your calculations, but it's capped at $100,000. So you have to just kind of toss out the rest of their salary. And then the question they're answering here is, does that exclusion apply to all employee benefits of monetary value? And the answer is no. If you are compensating your employees in other way, for example, you have retirement plans, or you have you pay for their health insurance, or you pay other things for them, you don't have to exclude those from figuring out your payroll. All right. Oh, here's Teresa. So she said she had a client who had not taken a draw or payroll from themselves, even as an LLC, and they could not apply even if they had expenses on rent, utilities, etc. So I think that's going to be true if they also were not showing a profit. My understanding is even if you're not paying yourself, if your business showed a profit, you can kind of claim that as compensation you would have gotten, even if, because we have this whole fiction with single member LLCs where you're not really on payroll, you're taxed on the profit, whether you pay it to yourself or not. So my guess is that was the situation for Teresa's client, was that they also didn't have any profit. Nikki had a kind of a follow-on question. So to confirm, I'm a one-gal studio, so am I a sole proprietor? Oh, I am a sole proprietor LLC, single member LLC. I pay myself monthly, so I can use that. I have a Schedule C from 2019's taxes. So I actually asked my SBA contact today, do we have guidance on what you have to show as your exact situation, Nikki, a single member LLC? How do you prove your owner's compensation? We don't have guidance on that, so the banks may ask for different things. My understanding is if you have filed your 2019 taxes, that Schedule C will work. So that Schedule C basically shows your net income from the business. That's what I used for mine. So I think that will work, but you've got to just check with your bank. If you haven't filed for 2019, you may want to use your profit and loss statement instead, because it's not going to be exactly the same as what's on your Schedule C, but it's going to be pretty darn close. So hopefully that answers. If y'all have follow-up questions, feel free to post them in the comments. I'll kind of keep that open. Let's see, scrolling through this guidance. Okay, so here is another good question. What time period should borrowers use to determine their number of employees and payroll costs? My bank actually required me to use 2019. This answer says, in general, borrowers can calculate their aggregate payroll costs using data either from the previous 12 months or from calendar year 2019. So you should have your pick, but again, banks are treating this differently. Maybe they'll adjust based on this new guidance. And then if you have a seasonal business, you can kind of adjust things. That would be like if you operate an amusement park that's only open in the summer or something like that, because your numbers will not be the same over the 12 months. All right, another good question was, should payments that an eligible borrower made to an independent contractor or sole proprietor be included in calculations of the eligible borrower's payroll costs? Now, this was pretty clear under prior guidance, but I guess they just included it because they keep getting it. The answer is no, you cannot include payments to independent contractors in your payroll costs. The idea is that the independent contractors may apply for PPP. So you should not be including them in your calculations. They should apply on their own if they can. All right, and then the last question, this is the one I found most helpful because it changes the amounts that I sent. This is what I wanted to recalculate. was how do you figure out your payroll costs? Now, I use Gusto for my payroll processor, and they had put together a PPP report last week, which was very helpful, which I ran and used for my calculations. And then this guidance has changed that. So they're updating their records. I got a new report. But there was a question about whether you, in determining your salary cost, you use the gross. So let's say they use an example of an employee who earned $4,000 a month in gross wages. So like, that's the top line number on their payroll. And then from that gets subtracted the employee's share of payroll taxes and the employer's share of payroll taxes, and then any state or local taxes as well. And so this new guidance basically says you use that 4,000, you use the top line, the gross that the employee has earned, even though they don't really take that much home in calculating your payroll costs. But it does make clear you do not include the employer side payroll taxes that you're paying on that 4,000. So you're just going to use that top line amount. And the initial Gusto report that I had run subtracted the employee's share of those payroll taxes, but that is not correct. So you can redo that if you're able to, based on this new guidance. And then this was the last question, which I thought was also helpful. I filed or approved a loan application based on the last version of the rules that were published on April 2. Do I need to take any action based on the updated guidance in these FAQs? And they basically say no. We're all doing what we can. And so if you made a decision based on what was out at the time, that's fine. But they do say borrowers whose previously submitted loan applications have not been processed can revise their applications based on these FAQs. So that's where I'm hoping that I'll be able to update my numbers based on the new definitions. All right. Okay, great. I'm looking at the comments and it looks like that answered everybody's question. So thank you guys so much for joining. Please keep the good questions coming. Like I said, I'm still in contact with my friend at the SBA, Sarah. She may be on. She sometimes hops on here if she's able. I know she is also juggling homeschooling as I am. But thank you guys for the great questions and stay tuned. I will share more information as it becomes available.